GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of our weekly webinar where we go through some technical analysis of the major markets that are popular with clients. That includes Forex, indices, commodities, and also a bit of crypto. Any markets you'd like us to cover, please drop a comment. Any other comments you have on the some analysis you're doing of your own, wanted our feedback, please do so. And of course, if you're enjoying the video, click the like button. So typically I'll start with the Forex markets, but you can see I've got a NASDAQ chart in front of me here. Just wanted to point out that NASDAQ has been leading the way down for US indices, and so you can see here that the NASDAQ closed below its 50-day moving average a couple of times over the last couple of weeks, and did so more decisively last week. And you can see that this has been a kind of pivotal area of both support and resistance on the way up and on the way down, basically around the 11k level, just under, I think, let's call it between 10,900 and the 11k, through there. And you can see that we're, according to futures, we're pointing lower as of Monday. And so this is obviously the big question here as to whether we actually get some further downside here. The NASDAQ is implying more downside, it looks like to me. We've not had a close through this pivotal area yet, but once we do, that could be a clue that we've got another leg lower in essence. And so if I just contrast that with the S&P 500, you can see here that we hadn't closed below it on previous occasions, but as of Friday we did, and then we're testing this support, which is not quite it's not drawn in quite such the same way as on the NASDAQ. You can see that previous kind of peak through there is kind of the same kind of zone, and then you can see that we've got that kind of major peak through there. So arguably the S&P holding up slightly better, because this was the kind of pivotal zone for the S&P, was still above it. But if we take out this low, having already closed down through the 50-day moving average, again the two indices moving down in sync, they sort of confirm the bearishness of each other. So that's kind of what we're looking at in indices. And while I'm looking at this S&P chart, let me just show you, this is a fairly interesting rising trend line through the peaks. Now it works with these last three, and you can see that obviously the last one was in combination with some bearish divergence, and you can even say that it kind of works with this one too, in terms of there was a false break and then we've got the close lower. So some suggestion that maybe we've hit the kind of upper end of our trend here. You know, it's been a gigantic rebound since the March low. We've put in the V, but maybe there's maybe there's some choppiness ahead. There's always reasons that the market might turn lower. It doesn't always have to follow those reasons. An obvious one for US indices is obviously we're now 5 weeks away from the US election, and there's a bit of worry out there that we won't actually get a clear result on election day. There's no great love for either candidate. It's probably going to be a pretty split vote, and we've got a lot of mail-in voting to deal with because of the pandemic, which could delay the result. So we will get a result eventually, presumably, but it could be delayed, and that would create some uncertainty in markets, and maybe we're starting to bake in some of that uncertainty already. Alright, so I touched on the indices there, but let's revert back to the Forex market. So again, this is the daily chart for the euro, and again we're still referring to this this kind of rising wedge pattern. But what was interesting, again talking about the 50-day moving average, we've got a decent rebound off that 50-day moving average, a hammer-like pattern. It was not at the end of a downtrend, so strictly speaking not a hammer, but a nice reversal, having a false break through this rising wedge bottom trend line and the 50-day moving average. And then also something that, you know, I've been saying that this is a slightly unusual pattern that we're looking at here. Probably, if anything, the rising wedge is bearish. That still could be the case. You've got to keep an open mind. The confirmation is when we get the, obviously if you'd been trading just the intraday break, that would have been a false breakout. You'd probably have had a losing trade here. You know, that's just nature of the beast. If you're trading the intraday, you get the higher risk of the false break. If we were playing on the close below this rising trend line, then obviously we wouldn't have taken a trade yet because we rebounded right back into the range again. So if we do get a close below this rising trend line, still the bearish setup is on, and as we talked about in the past, probably 115 would be a logical level given the previous peak there. But what I'm starting to think now, why I'm actually my logic starting to flip a little bit positive on the euro, is the setup that we have here is called so when you're talking about RSI, the typical patterns that you look for are bearish and bullish divergence. But there's another way of doing RSI, which is called a positive and negative reversal. And this potentially is what we have here, where price is rising, but so the momentum is turning lower, but the price is holding strong in the face of this weak momentum. So you can see we're making lower lows on the momentum, but the price is holding up. So potentially that's what we're dealing with here, is actually while the momentum's holding low, the price is showing relative strength, pointing to an extension of the uptrend. So a combination of a positive reversal and a strong daily reversal of these key levels, potentially an indication that we're flipping a bit bullish on euro dollar. So let's look out for that. Now onto the pound. Well, we highlighted these two levels last week, and the first one seemed to work quite nicely, and unsurprisingly enough, we got a rebound off this previous peak. So resistance turned support, and then we just banged straight into again our 50-day moving average and the 1.30 round number. So all and previous support. So all pretty textbook moves here. Obviously the question is, do we roll over again from 130 down to the next level of support, or do we in fact get a bit more of a further extension? Of course I don't know, I don't have a crystal ball, but we've got to play the probabilities here. I would suggest that the selling that we've seen so far off 130 was not too comprehensive, and what I suspect we probably end up doing here is that we actually consolidate for a while. So potentially popping a little bit above 130, potentially popping a little bit below 127, but still maintaining this range. So I suspect we probably get something where's a similar example where oh, okay, hold on. So on the upside, oh, hold on. Something like this, where we rallied up, hit the level, and then just went sideways in a fairly tight range. Potentially, who knows, but we could be eyeing up something like this, where it just goes very range bound for a while. You know, if we move this shape over to where we currently stand, it could end up being, you know, it's a similar sort of size range, almost perfectly, right? So you can sort of see how history repeats itself with these currency markets. So potentially that's what we're dealing with here, is a bit of a range bound situation. And if that does occur, then that would increase the likelihood of another drop lower. So that'd be weakness in sterling. So a bit of a diverging picture between euro dollar and pound dollar here. So not to say that they have to always move in sync. We obviously have some specific risks around the pound, although they obviously tend to when we're looking at either periods of dollar strength or dollar weakness. So moving on to dollar yen, and this was like the notable mover from last week, and I think I called this pretty right, saying that it looked like having tested these levels several times, that we were going to get a more sustained move lower, and that's what we've got. We've come down, we've tested 104, we've actually broken down through the lows here, and we're back at our lowest levels since February. So the downtrend never got a pop to the top side of the trend here, which obviously shows weakness in itself. So we were kind of ranging, and if we were staying in the range, we'd expect to move up here, but we just rolled over, took out the key support, and so very much in a downtrend at the moment. I mean, this is on a daily chart, you know, pretty weak momentum, obviously, but for those brave enough, this is obviously the prior low. We may get some defense of the 104 level, particularly if we get some chatter from Bank of Japan officials who may be looking to defend this level. But what I said last week, I believe, and I stand by, is that once 105 gives way, really we're probably looking at a pretty swift move down to 100 down here. For some reason this trend line doesn't want to play games with me, but it is playing games with me. So that's more like 101 down there, this previous low, but I think that's possibly what we've got on the cards. So keep in mind that we've got some extra support on the way down. We've hit the previous low, certainly could get a bounce back, perhaps even up to 105 and roll over again. But the momentum certainly to the downside, and I personally wouldn't want to be buying this market for any sustained period at this point. It looks like we've turned into a bearish trend. Clearly we've been down for a few days in a row, so we could get a pop from 104. Doesn't look like it at the moment. If we breeze through 104, look at the test of the bottom of the channel line as next resistance, and then I suspect we're on our way to 101/100. So one of the more interesting pairs to trade at the moment, dollar yen. Obviously up near the broken support was one of the better places to get into this, but still nonetheless we've got a trend, and particularly if you're trading the short time frames, you've got one of the more powerful trends to trade to the downside there. Aussie dollar, this rising trend line is just the gift that keeps on giving. There's been so many trades off this, 1, 2, 3, 4, 5, and we're still holding on to it. We're consolidating up here. Last week I think we had the kind of break level as something like down more like this previous peak down here, and then we've just kind of shuffled above it. We had this little spike peak here, and we're kind of just we had a couple of false breaks, and I think that my conclusion last week was that we're not going to get much higher and we could break lower. We did kind of shuffle above it with some false breaks, and same again here, but it sort of seems like it's ready to roll over Aussie dollar after this big move down, kind of correction phase up before the next leg and break finally this rising trend line. It, to me, seems probably what we're dealing with. And then actually it's not the most steepest trend line, so once you do get a break, you'd just be looking to target all those lows together through here is our kind of zone of support, if you like. This low, this low, this low, which clusters in around 71. Moving over to the gold market, so we have, if you look at the weekly chart, you can see we have closed for the last 2 weeks in positive territory, but nonetheless you can see that through those lows there, the kind of bodies of the candlesticks have basically been in, they've not broken up one way or the other for the past 1, 2, 3, 4, 5 weeks. We've basically been in a horizontal trading range. We had the move up to record highs, the big drop, and then just consolidating inside a kind of tight range here. And obviously we don't really know which way it's going to break, but we do know that we're quite substantially above the weekly moving average, although the consolidation phase has given us a chance to retest and hold on to a couple of times the moving average on the daily basis. So that could be enough for us to shift to the top side. I still think the fundamentals in terms of loose monetary policy, chance of more fiscal policy, altogether probably points to ultimately higher prices in gold, but obviously we can still get technical corrections to the downside in the meantime. Moving on to oil price, well, with some big moves this morning, incidentally. This was a really powerful move that I didn't see coming. I thought we might get capped out at 40, but we moved up as high as 41.50, having rebounded from this little prior low down here. I thought we could even roll over pretty quickly and test the next low, but we didn't do so. And again, I think this is probably an example of just on this, you can see here we're above the moving average and we're kind of grinding higher, and here we're kind of well above the 50 mark, certainly well above the 30 mark on RSI. So this was an uptrending period, and now I think we're not necessarily in a downtrend. I think we've just flipped into a range bound period. So again, looking at what's happening with the moving average, kind of big move lower, but then a big move above it, like below it, up it. That's more what you get in a trading range than a sustained uptrend. So we may have just had enough of a correction to continue this. So this could have been the correction, and then we continue on the upside. I tend to think that probably we're going to kind of more like an ABC, so A, B, and then C. So potentially B's done at 41.50, and you can see in terms of these previous peaks, 41.50. Maybe it's better if I zoom in a tad, or even on the 4-hour chart. Yeah, not brilliant to see on any of them, to be honest. But you can sort of see through here and through this last range, you can sort of see why we got to 150. It was an area of resistance, then support, and now resistance again. And we're pulling back from there. 40 potentially an area for it to pop above if we're going to continue to the top side. But again, after this big leg lower, you know, I tend to think this is just a dead cat bounce, and it will probably are ultimately heading to the downside, and a break below 40 would be a bit of extra confirmation of that. Moving on to Bitcoin, I've got a very short term, well, the 4-hour chart here. Just to give this a bit of context, so basically remember we'd mentioned this level through here, that it was basically the 10,000, but a little bit below it, the 9,900. We got a decent bounce from there, but we didn't get as high as 12,000. We came into those old lows of this was basically an old head and shoulders pattern we'd mentioned in one of the daily notes. So we bounced off that key old support and then ran back into the neckline of the head and shoulders. And so there hasn't been a whole lot of selling pressure here, and we certainly could just breeze through this neckline. The trend is up, so actually that's probably the most likely scenario. But just in case, to provide a kind of possible plan B, if this rising trend line breaks, I think we probably come down here to test these old highs as resistance, turn into support, and then get another chance at lower prices to ride the trend and eventually break that. So we could just move straight through resistance, but if we've got a kind of bullish mindset on Bitcoin, we could pull back to this support after that broken rising trend line, then get the move to the top side. And last but not least, we've obviously already touched on the indices. So that's about us covered for today. Thank you very much for tuning in. Again, if you like the video, please click that like button, and if you click the subscribe button, then you'll get notified about these videos every week when they're ready. Thank you everyone, good luck trading this week.